plan. And one of my major checklists that I always highlight is volatility. If there's no volatility in the market, I stay away. There's no point because you can never accurately measure your risk management properly. So I think that's one of the main things there is volatility. Volatility, volatility, volatility. We always speak about this because then you don't have a clue where to measure your risk, where to put your stop loss, and that's it.
And that's a good point. Maybe Fabio, you can take a little 2-minute deep dive. How the people can see if there's enough volatility when they use our Mentor Q tool. So what they can use to see how much volatility could be possible in the market, how much we can expect it.
Sure. So let me go into the bot 1 second. All right. All right. So let's go into the bot. Let's go here. So the first thing you want to monitor is when you come into the membership, you have access to the stock channel here. You can also request the data from the bot. We're going to show you in a second. But the first step you want to look at is the liquidity snapshot. So you want to see here, for example, you have access to the implied volatility of the assets. So in this case, we are looking at QQQ. So you have the implied volatility, you have the historical volatility, you also have the gamma condition. So knowing basically if the market is in positive gamma or negative gamma will allow you to see if you can expect volatility or less volatility. So we know that negative gamma typically brings more volatility compared to positive gamma. So looking at the gamma condition here, very important. Looking at the implied volatility here, very important. Looking at the IV rank, very important. We can then go into the chart and we can look at the main chart and we can see, for example, the implied volatility, which is the red line here versus the historical volatility. So always look at volatility as it's kind of like an elastic band where implied volatility and historical volatility tend to come together all the time. So we see like it's kind of like a rubber band that is like moving and coming together. So looking at, for example, the implied volatility here versus the historical is very helpful. And it can give you an idea of like, is the asset in low volatility environment or in a high volatility environment? And then also monitoring our levels. So I think if we look at our gamma levels and we put this in the chart, the levels that you want to monitor is the high vol level, which is kind of like the shift in gamma regime, kind of like it dictates where we are going to start to see the shift. So that means that above or below this level, there could be an increase in volatility. So it's another tool that you can use to monitor.
Yep, that's amazing. And also, Steve, you're unmounted, so you must unmount yourself, please. And also, you're looking for the VIX, yeah, correctly?
Yeah, always looking at the VIX, seeing how it's reacting, seeing if it's starting to move at the same time as, let's say, the price starts to move. If we see like a major shift in volatility in indices, but VIX is not really moving, that could be a sign as well, where maybe the time isn't right yet. Whether to gauge whether it's fearful or there's more demand on the hedging side on VIX. So yeah, that's one of the main confluences we always use is the VIX. It doesn't always align perfectly, but we found in the first few hours of New York, it definitely aligns a lot better as a hedge. Later in the market in the afternoon, with the way VIX is repositioning, I wouldn't use it. I wouldn't advise on that. But within the first few hours, definitely a good indicator here. So yeah, like I always map out the support resistance, as well as the of course like the Mentor Q levels I plot on as well, just to see more confluence where it's heading. Yeah, and just because like VIX breaks to the downside, breaks the support resistance area, doesn't mean that the indices are going to fly above and start squeezing. But it's also good to make note of If VIX is starting to break its support and not and won't recover, then there could be a possible squeeze in the future. But because we had VIX kind of like, come down this area, consolidate, and start moving higher, this is probably the perfect time. Not perfect time, but an interesting time to start looking towards a short. Because yeah, once VIX started like breaking higher, had a little fake out, that's probably around the same time we started to get a flush. And when like more supply was entering the market and it needed to kind of go down to where there's strong demand. Where was the next strong level of demand? The 472, 473, and 559 area, right where we had the blind spots as well as the trigger zone that Fabio was talking about. So not only did we have the trigger zone at 0 TTE, but we also had like the high volume level, like one of the main ones, as well as 0 TTE. We don't always have it line up exactly like this, especially with the blind spot one, Patrick. Like we had just crazy amount of demand in this area. And if you zoom out the left as well, it just kind of matches up with like the other levels too.
Yeah. So what we really need, Steve, and what is really helpful to understand is like we want to see that the blind spots supporting the gamma levels. So no matter if this is blind spot 1, blind spot 10, or call the number whatever you want, but we want to see like exactly what we were seeing on QQQ, that blind spot 1 is supporting the high wall and high wall 0 DTE, and blind spot 4 is supporting the other gamma level above. And we see this on the SPY also. The blind spot 4 is supporting the 1-day max. Everyone, when we see something like this, we know exactly that we have a really strong support and resistance area. And this is something what we should map out, exactly what was Steve doing based on the roadmap principle. And then you know exactly what strong areas you have on your chart. And look always for the strong areas where blind spots supporting the gamma levels. And yeah, and if you're looking for maybe QQQ, looking also for the SPY. So we have exactly the picture what we have today. So on the QQQ, we have above 1-day max supporting BL4, but on the QQQ, we have a different picture. We see now high wall 0 DTE support BL1, and BL4 is supporting the gamma level above. So this is what we call classic correlation. So, and this is something why you should looking into booth tickers, especially if you trade the futures. Look to the SPY, look to the QQQ, and in best case, have also the VIX on your chart.
Absolutely.
Yeah, exactly.